Hello again and good morning. This is Jennifer Johnson checking in from the Coaching and Financial Wellness Department at Lifespan. Here with Mr. Glenn Clevenger, your facilitator, to present to you the final part of the two-part series about money and your life. So let's just kick it off. Glenn, you ready to take it away?
I'm ready if you are, Jen.
Okay.
Good morning, everybody. Thanks for joining us today. Today, we're going to talk about some things that will help you manage your money and your credit. Before I do, though, I'd like to tell you a little story about this guy who has a fatal disease. He's going to die. So he calls in his CPA, his lawyer, his banker, says, guys, I want you to liquidate all my investments into cash and bury the cash with me in the casket. And they all go, well, it's kind of strange, but okay, it's a dying wish, we'll do it. And so he dies and is buried. And the three of them get together later on, and the lawyer says, I have a confession to make. I took some of the money out and gave it to my church. And the CPA says, oh, I'm glad you said that because I did the same thing. But the banker says, I'm really disappointed in you guys. I put a check for the whole thing in there. Check, not the cash. Anyway, kind of a money joke there. Get it started, okay? All right, so let's get started on the first slide here, Jen.
Okay.
The first one is about budgeting. Here, I got a couple things to say off the cuff. First is budgeting is something that I think everybody does mentally, but it really does help to put it down in writing if you're close. That is, if you know that you're got to watch where you spend. It really helps put it down on paper because that way you can see it and look forward to it, and it's kind of in your face all the time. The other thing that's important here is to realize there are certain kinds of things that you have to take into account. Of course, you have to pay your utility bill, right? You have to pay your rent. That because it comes every month. Like car insurance, like if you own a home, real estate taxes. And so you got to realize when they're going to come. My wife and I just did this the other day because we're going to have to pay real estate taxes here next month. So it's something to keep in mind. And if you have to budget for it and save for it, then fine. Just realize you did do it. And then, of course, there are unexpected life problems that pop up. I personally had a stroke when I was 45, a long time ago, thankfully. It wasn't hard. I mean, it wasn't a serious stroke, but, life happens. And that was everybody. And if you have no savings, you're in a roll of hurt. I remember when I had my stroke, I had a kid in college, another one going to college next year. And so our savings were all devoted to that. We lived in credit cards for a long time. It was almost to the point where I had to sell my house. That's how bad it was. So keep it in mind, it does happen. Hopefully not as bad as it happened to me. But that's something that if you can plan for it and save for it, it's going to put you in a good stead long term. So that's a couple of things on budgeting. Next slide, Jen.
All right, give me 1 second.
There you go. All right. So having been a banker for 40 years, one of the things that I know is true in lending is the ratio of your income to your debt. Okay. And one of the rules, you see the slide here, so it's 35% on the left-hand side for housing and debt payments of 5 to 15. Well, the rule of thumb is 40% of those two together. So any debt you have, including your house, your car, your credit cards, you add up the payments, monthly payments, compare that to your monthly income after tax, and that number should be less than 40%. Now, some bankers, some lenders, when they're trying to be aggressive, go 45% or even 50%. And sometimes when the economy is really rough, it's not rough right now, but the economy's in recession, bankers will actually decrease that percent down to 35% to make sure they're going on lending to the best credit people they can lend to. But the 40% rule is the final. And so, some other rules in the slide are okay, but I can tell you from my personal experience, 40% is a good place to shoot for, okay? All right, Jen, next one.
Okay.
All right. So if you're going to do a serious budget, you need to track it so that you can see what happens over time. That way you can know, I think, better. It reminds me of my church. I work with my church quite a bit, our financials. And my church has what I call lumpy income. That is, they get donations every Sunday, but every once in a while they get somebody makes a big contribution. And so it's hard to plan for that kind of stuff. If your income is lumpy, like a construction worker might be lumpy sometimes because he might not work for a while and then get a job and they won't be off for a while.
Mm-hmm.
Then you definitely need to do some planning. You know what? It's just on my diet. You know, I'm constantly on a diet, and I find that it's the best way for me to do it is to weigh myself. It's a self-humbling experience, if you will, in my case. But having that in front of me and looking at what I weigh is really a way to bring it home to me and really helps me know that I need to keep trying. So, and also kind of reward sometimes.
Mm-hmm.
Okay, so that's that slide. Okay, next one. This is kind of a summary of all this budget and stuff. Okay, a couple of things on here that I want to just emphasize again. Life's going to happen to you. If you don't have parents or friends or somebody that you can help out, in my case, I lived on credit cards for a while, then you're going to be a little hurt. And it's important to know that it's going to happen. It's hard to realize that though when you're young. You know, I had a stroke at 45. I weighed up about 100 pounds more than I do now, and on a lot of stress, excuse me, at work. So I should have known better. But even at 50, if you haven't saved, this is something that's going to be really a problem for you. A couple of things to think about here. Gifts. You know, do you want to buy gifts in Christmas? Christmas for us is always a big time to spend money. So you plan to have that kind of stuff. Again, write it down if you need to. I find it helps you. I'm sorry, that's my phone, guys, but I'll ignore that. But anyway, that's the budget. Okay, so enough about budgeting. Let's go on. Jen, go ahead to the next slide, please.
All right.
So this slide gives you some things to look at. You know, one of my biggest bills now is my TV. Okay, my second biggest bill is my phone. This slide here gives you some ways to go and budget online. And I want to say to you also that this can be really time consuming. That is, if you want to spend a lot of time on budgeting on these websites, that's fine. I find it's not that helpful, but it's good again to write it down, have it in front of you, and you should see it and be aware of it. It helps me on my diet, I'm sure. Good. Mm-hmm. So that's a couple things on that. Next one.
If I could add something to that.
Yeah.
So I know that especially, you know, right now we're recording this during the pandemic. It's been a very difficult year for a lot of us. And one of the great benefits that me and my family have taken advantage of is the grocery store that we decide to purchase our groceries from has a mobile app that provides you coupons. And it's so easy to just click the coupon while you're ordering from your phone, and then you can go and pick up your groceries, you know, it's contact free, and they just kind of put it in your trunk for you. So, I mean, you know, depending on where you are with your budget, I really do think some of these are really helpful. I know I see the UDrive card on there. If you have a UDF near you, if you decide that, you know, that's a place that you like to purchase gas, I think they give you like a 10 cents off, you know, for every, you know, so often. It's one of those rebate things. So and some of these are definitely more helpful than others, depending on your community and the resources that are available. So I would encourage you, if you have the time, to kind of look into them a little bit, because I know that the digital coupons have been a real savings for my family. So
Jen, take a look at the next slide.
Sure. Oh, give me just a second. There we go. Sure.
See, you just talked to the slide for me. Thank you. This slide reminded me of my uncle, one of my uncles, who was just a fanatic about coupons. I remember a week on coupons, but his family had to eat what the store was selling, coupons. And so every once in a while, I'd go to his house and he'd have like refrigerator full of vanilla ice cream because that was on sale on coupons. But he said he'd save 30 or 40 bucks a week on coupons. Every Sunday, he would sit down with back then the newspaper and clip out all the coupons. And it really did save him a lot of money. So Jennifer, thank you for that, because that saved you from this slide. Let's go on a little bit here. Next slide, please. Next I want to talk about is credit reports and credit scores. Those of you who don't understand or don't know about credit reports and credit scores, this is actually one of the most important things in terms of your life, that you can know about. So please do some research on this after our presentation here today. Credit report, believe it or not, there's a credit report on everybody in America. Somewhere in America, there is somebody who knows everything about your money. And there are three companies here in America, Experian, Equifax, and TransUnion, who are the leaders in this area. Our bank, my bank, used to use Equifax quite a bit, but different banks use the different services, all about the same pretty much. So what is a credit report? Well, a credit report is a report that actually lists out everything about your money. And it says what you paid late. It says how late, how much your payments are. I would literally put a credit report on every single person I made a loan to and look at it closely, because that was for the bank. That is telling the bank, if you can't manage your own money, I'm not going to let you manage the bank's money. So a poor credit report will kill a loan, or you're going to see it a little bit later in another slide. It's going to cost you money in terms of increased interest expense. If they get somebody to lend you money, it's going to cost you more. So this is something I want you to be, I'd like you to know about. Also, there's another report. It's not called a credit report. It's a bank report, if I forget the name. But it tells the bankers all about how you manage your checking accounts. So if you overdraw your account a lot, the bank knows about it. My point is, everything you do money-wise, somebody can find out about it. And so this is one of the things that's really important to know about. Okay, next one. Jen, please.
Okay.
So the Fico score on the left-hand side here is the one that most bankers use. That's a numerical score, a number, okay, that tells you how your credit is good or bad on a scale. We'll see the scale in the next slide. For right now, though, here's what's important. The FICO score is weighted highly on how you make your payments. If you make your payments on time, it's going to really help your credit score a lot. How much you owe, that's the 30% purple section there, is amount owed. You see later on slide that says any credit card where the usage is above 30% of the limit is going to be a negative impact on your score. So that's another thing to keep in mind. Does it mean you go out and get more credit cards? No. In any more than 3 credit cards, you're probably going to impact your credit score negatively. So keep it in mind. How long have you had credit? Well, no credit. I had somebody come in the bank one time, so I have no credit because now I had to borrow. That's bad, because I don't know what kind of guy you are to manage your credit. So if you have no credit, go and get a credit card. You have to use it so much, but it does help just a little bit every month to use it, pay it off, and that way you'll know you have good credit, okay? So the length of credit history is the third most important thing. And if you have a long history, then you will have a better credit score. New credit. So if you go out and get credit cards from Pennies or any place, retail credit cards, and you have 2 dozen of those, that's going to have a negative impact. Okay, And so you go ahead and shop for a car. Every time you go to a car and they pull a car on you, it might impact your credit. So new credit's important, and the type of credit. So if you only have credit cards, you have no mortgage, no car loan, no other kinds of merchant credit, that's bad. So try and have 2 or 3 different kinds of credit. Car loans are good. Credit cards, 1 or 2 is fine. Mortgage is fine. Okay. So keep that in mind because that's going to have an impact on your credit score. All right. So that's then in summary, that is where the credit score comes from. Next slide, please, Jim. Here is the actual credit scores. Okay. Now this is the FICO score. So you can see anything above 750 is pretty good. In my bank, anything about 800 was golden. 850 is the top you can get. Now, if you have a margin credit, let's say it's down on the average scope here, 600 to 650, that is where you start turning into problems. Where you start to have people say, okay, maybe you can't manage your money as well as you should. So if you have a poor credit score, you'll see in a couple of slides that it's going to be a real problem for you in terms of getting credit. And by the way, it's not just loans. Nowadays, landlords will check your credit. Utility companies will check your credit before they give you turn your gas. So keep it in mind, it's getting to be more and more of a factor in your life. Now, you see on the file here on the screen, it says no judgments, tax liens, or negative findings. Okay, so if you have somebody who has sued you because you didn't pay them and they won, they report that to the credit report agencies and they'll drive down your credit score like crazy. So if you have a poor credit, what you do, you go to that person and say, look, I'm sorry, I lost my job, I got sick, I couldn't work, whatever it is, please give me some time. And guess what? They probably will. The banks do. Okay. As long as they're convinced that you are a good credit, whatever happened to you is going to be okay, then you'll be okay. I think about a loan I made to a guy who was a plumber. His whole life, he's about 50 years old, and he got cancer. And what he did was he sold his house, and he had no health insurance. Sold his house, sold all his tools, couldn't work, and lucky for him, he went in remission. But then he had to work again. But he sold all his tools, so he came to me for a loan. And because he had poor credit then, because he had all credit cards he had lived on, the bank said, well, this guy's a bad credit. But to look at his past history, what he did before he got sick, he was always good. We made the loan, and it worked out fine. But keep that in mind. It's something that's it's important. The other thing that's important is banks have kind of cut-ups. I mentioned our bank 650 is kind of cut up for us, but it's hard to get things done. That number, every bank is different. Every bank. So some banks might say if your score is 700 or less, you're not good credit. What it means is if you're looking for a lender, shop around because some banks are very aggressive, some banks are not. And that number varies from time to time. So if the bank has a lot of poor loans, bad loans, okay, what they'll do is they'll raise the minimum credit score so they only lend to good credit people. So that score, for bankers at least, is one of the things we just live by all the time. And for you, it can impact your life greatly in terms of getting credit and perhaps even important or perhaps even utilities. So let's look at the next slide, Jim. This one gives us some idea of the impact of what your credit score might do to you. You see the top line there is 720 to 850. Annual rate interest you might get, monthly payment. Look at the difference when you get poor credit. Now, frankly, you get credit down to 625. What's it? 1, 2, 3, fourth line down. You probably can't get a decent bank loan. You might have to go to one of these places where they just stop you. Okay. And if they do, you can see the impact on your incidents. It's just terrible. Now, one of the things that people ask me all the time is, what's the fastest way for me to get and improve my credit? Next slide, Jen. You see, this is a chart that gives us some idea of what you face when you have different kinds of credit. And let's see, what is it? There's a line starts at the bottom. 1, 2, 3, 4, 5. Fifth line up. Talks about how much time it takes to get your credit back. And 6 months sometimes is not enough. So what do you do? What do you do to impact your credit? Possibly to make it improve faster. Well, unfortunately, it's nothing you do right away. If you have paying credit, you're stuck on it for at least 6 months and maybe longer, okay? But you can do a couple things. One is go down to the bank, give them $100 cash, okay? And say, give me a credit card secured by that cash. So if you don't pay the payments, they'll take your cash and pay it off, okay? But get the credit card, use it, and pay it off every month. Down to the steps of payment history, they'll have a big impact on your credit score. Secondly, if you have a friend or a relative who has good credit, has a loan, ask them if you can co-sign that loan. Their payments then will impact your credit. You have to make any payments. And so, that's another way to do it. Reminds me of a story of a guy who came before a loan, and he guaranteed his daughter's a loan, and his daughter told him that she was making the payments. She was not, and so when he came through the loan, his credit score was so bad I couldn't make a loan. I often think of how many awkward Thanksgiving dinners must have had. Anyway, so that's what you do. It takes time, okay? And you see here what it takes sometimes to get a loan based on your credit. All right, a couple things. Next slide, please. So here is credit cards. Now, I have only one thing really to add to this slide. That is, if you have want a good credit card, go to nerdwallet.com. Nerdwallet.com. NerdWallet is a website that's been around a long time. They actually can refer you to lenders and help you get the best credit card you want. You want travel points? They'll go and find the best one for you. You want the lowest rate based on your credit score? They'll find what's best one for you. So NerdWallet, free commercial with them, is great. Okay, and this is a little slide that gives you some idea of some things to talk about. All right, next slide, please.
Thank you for that input. I'd actually never heard of NerdWallet, so I'm looking forward to looking into that. Thank you.
No, I used NerdWallet many times, and not personally, but with other people, and everybody has said good things about it, so I recommend them. Okay. All right, so here's the best recommendations, okay? Open new accounts only as needed. If you show up with 27 credit cards, your credit score is going to be bad. Pay all debt on time. We talked about that already. It's the most important thing you do. Pay down what's in place. Yeah, if you can. Okay. I mean, I actually retired with no debt. But when I retired, that was the first time in my life I had no debt. Okay. And some of that's not bad, as long as it's not too much, right? And so the auto mortgage inquiries will count as one only if you do it within a 2-week period. So go shopping for a car and go to 4 or 5 elite dealers. Each one will pull up your personal credit, but it counts as one inquiry. And each inquiry costs about 2 points on your score. Okay, so not a big deal, but it can add up if you don't pay attention. And I mentioned the last item here, monthly credit card balances, keep them at below 3% of the limit if you can. Above that, it'll start to negatively impact your credit score. Okay, that's a good summary there. Next one, please. Next slide. So, can you pay the minimum on a credit card? The answer is yes, you can. But look what it does to you. look what it does to your payments. This is, as an example, a guy who had $7,800 and credit card. Interest rate 15%, which nowadays is not is low. Most of them are 20, 25. He makes a minimum payment. It takes him almost 4 years, plus an initial $2,000 of interest to pay that credit card. It doesn't make any sense. Credit card borrowing, I can tell you from personal experience, is the most expensive kind of debt you can take in most cases. So that is one to keep in mind. All right. Next one, please. So one of the things that people nowadays have, I had a student loan, but it was like $10,000, wasn't too bad. But some people have now student debt as 50, 100,000. I make loans to chiropractors and doctors who all had 100,000 or more of loans when they got out of school. They started a business, be a chiropractor, and they have all this debt and no income. Well, what they had is what is called here income-based repayment plan. See what's in the middle of the pack there. The government allows these kind of people to pay their, thank you, Jen, to pay their student loan based on their income, a percent of income. So as they earn more, they pay more, but they're not buried in debt right in a box where their earnings are low. And there's all kinds of other plans you see here that are available to you if you have a big student loan. And nowadays, I just heard our new President Biden's going to perhaps give you some break as well. So we'll see. But keep it in mind, because I know that credit card debt can be a big, big impediment to your financial future. Plan to manage that debt using one of these plans here, and you'll hopefully be better off for it. All right, next, please.
If I could add one thing, just from
yes, sure.
Working with some of our clients, the income-based repayment plan, the way it's set up right now, is really helpful for those who are in the public service industry, because they have it set up to where if you consistently make your payments without missing any, and you have continued employment in the designated field for 10 years, there is a forgiveness option to where that loan or the remaining amount of that loan gets forgiven. So if that's something that applies to your circumstance, I would highly encourage you to look into that. I know that a lot of people that work in like the healthcare industry or social services or education qualify for this program, and I think it's definitely a really good one to help out those individuals.
Yeah, that's good advice. Thank you. That's good. I didn't know that. All right. So savings. So what do people have savings nowadays? Do people have lots of cash in the bank in the savings? Not many. Not many people. So where do people save? They save by equity in homes. They pay off their mortgage. They build equity that way. They have in 401k accounts or pension at work. Okay. And you build savings and Social Security. Those are three ways people nowadays save most of the time. Some people, they're lucky, can save 3 to 6 months of expenses. Okay, I never did. in my career, my life, during my life, with the kids in college and all that, I hardly ever had that kind of savings. I used credit cards as my fallback, and as I got older, that gradually went away because I got rid of the kids. But that's a joke. That's a joke, kids. Okay? I love the kids. But it's really true. Nowadays, people have savings in the homes, their 401k, and Social Security. Okay, so if you don't own a home, that should be one of your long-term or medium-term goals, to get a down payment and buy a home, fix it up, live in it, and build your equity. Okay. The other thing is 401k, and let's talk about that next slide here, please.
Yeah. Sure.
This slide here talks about your benefits at work. Now, I was a banker my whole career, so I had benefits in terms of health insurance and dental and 401k. Now, 401k is, you don't know, a great way to save for your retirement. Because what it is free money for an employer. Most employers will match what you pay up to about 5% of your savings. That's free money to you because it's not taxable. It only becomes taxable when you take it out of the 401k. So one thing to keep in mind is if you work for a company, it's a bigger company, will offer you all these benefits. That is worth a lot to you over the years you work, okay? And some companies like GE, for example, still have what's called a defined pension plan, where if you worked there a long time, they'll tell you exactly what you can get every month as a pension. Now, not many of those are left nowadays, but the 401k now is the one you'll find most people places. But many places don't have that. And so if you don't have a 401k or health insurance, especially health insurance nowadays, you might want to think about looking into another kind of industry where you can give those benefits because they're worth a lot over your life. All right. And next slide, please, Jen. The Earned Income Tax Credit is one that's available for people with children. And my daughter gets it now because her husband died, and she gets this now. This is something for generally the lower income people who are citizens of the U.S., have Social Security number, okay? And what it is it means whereby the government lowers your taxes to help you as a low income person to live better. So this is something to keep in mind. And if you haven't looked into it and on your taxes, please do that. You might qualify. It can be a pretty good number. So something to keep in mind. All right, Jen, I think we did it. I hope this gives you some tools to think about and use as you start to plan your financial future. This is something that Lifespan knows a lot about. You might get stuck with me, so I'll be glad to help as well. But Jen, I know, can help greatly. You see some of the stuff that Lifespan offers. Helping buy a car, student repayment, financial workshops, all stuff that Lifespan has been doing for years. And if me or Jen can help you out, please call us. This is what we like to do. We like to help people, and hope we can help you. Jen, thank you so much.
Thank you, Glenn. Thank you so much. Yeah, so just to add on to that a little bit, these are some of the programs that we offer in the Coaching and Financial Wellness Department. And we have so many people from so many walks of life that we are happy to partner with and help them kind of meet their goals, both financially and personally, through financial coaching or life coaching, or even like our Steering for Success, which is helping someone, purchase that automobile that would help them have a stable mode of transportation. Sorry, I have a little tickle in my throat. But we would be so happy to meet with you, to hear from you, and to help you with any of these concerns or questions that you might have. So I'm gonna put up a slide again that has my personal email address on it. I would love to hear from you. Maybe even just give us some feedback about this presentation. And of course, remember that course completion certificate. That is definitely something that you can save and submit to your HR department and keep in your personal file for completing this course. Just a little feather in your cap to show that, you are continuing to pursue your best self. So, yep, I will post that up there for my contact info, and I am very much looking forward to hearing from you. Glenn, is there any last thoughts that you have?
No, Jen, just thank you for all your help and patience with me. I think it went very well. I did think of another joke, but no, we're not recording now, right?
Oh, no, we're still recording.
Oh, yeah, no. Well, enough jokes there. Okay.
You can edit it out, though. Hold on one second. I'll stop it.